Great. Okay. Well, good morning, everyone. Thank you again so much for being here. You have arrived on Zoom at the Minnesota Cup event, Financial Basics, How to Elevate Your Min Cup Application, which is graciously presented by our good friends at Lurie LLP. To kick things off or to get them introduced, I'm going to quick say that I'm Jessica Berg. I'm the director of the Minnesota Cup. I've been in this role since late 2017, so 2021 is my fourth season. But I'm just here to help, and I'm not the expert, but I will be able to answer any questions you might have about the application process or any of the kind of behind the scenes tactics of how this phase works. And then I'm really proud and excited to welcome Kevin Besselcroft, Nate Schubert, and Amy Jungarius to this panel, who can get into the weeds, as they're the experts on all of this lovely financial information that we're going to ask you to start thinking about and prepare. So I'll turn it over to you, Kevin, first.
Hello, everyone, and thank you for attending. I'm Kevin Besselcroft. I'm a partner at Lurie. I've been a judge with the Minnesota Cup here for about 6 years. Really excited to kick off another year. I just love the energy. I love the entrepreneurial spirit, and it matches really well with our firm. Just a little bit about Lurie. Lurie is a CPA firm. We're about 80 years old, and we have locations here and in Florida. We're big supporters of the entrepreneurial community, whether that be through Minnesota Cup or other partnerships that we have. We're just really excited for this year's Minnesota Cup, really excited that you're here, and really wanted to put this together so that some of you can get ahead on what makes a financial element of a Minnesota Cup application really stand out. And I'll turn it over to Nate.
Thanks, Kevin. Good morning, everyone. Nate Schubert. I'm a partner in our tax services group here at Lurie. Work with a variety of businesses and high net worth individuals. I joined on the high tech group division judge last year, so I'm excited to have year 2. In addition to that, I have a passion for working with entrepreneurs and involved in the startup community. Been part of Minvest, which helps allow for equity crowdfunding here in Minnesota. Also involved with Enterprise Rising and Lunar Startups. I'm on the expert network with Lunar Startups, and also on the board of directors at the Minneapolis Regional Chamber. My involvement with entrepreneurs is really around tax structuring, planning, and business advice. Amy?
Great, thanks, Nate. I'm a manager in Lurie's Book service line, which is our outsourced accounting, payroll, and financial reporting service team. I work with entrepreneurs and business owners on a daily basis, really helping to maintain their accounting function of their business so that they can go and do what they do best, right? Which is really managing and growing their business. I've been involved with the Minnesota Cup for several years in different functions of Lurie's sponsorship commitment to this competition. And I'm so excited for this next year's competition, as it's one of my favorite times of the year is to celebrate the Minnesota startup community and everything that we can do to support the entrepreneurial spirit within the Twin Cities marketplace. So glad to be here today and looking forward to today's presentation with all of you.
Thank you all again so much for being here. Minnesota Cup really could not do what we do without the financial support of our amazing sponsors, but particularly the volunteer time commitment of all these really incredibly smart people. So thank you again for all of your support. So a quick overview of what we're going to be doing here together. We're going to try to keep things moving and keep it efficient, but I'm going to tell you a little bit about the Minnesota Cup application so that if you haven't opened it up, if you're like coming in hot and you've never heard of us before, what to expect and sort of what we're all about. And then we'll move into sort of the components of the financial story that you're trying to tell in your Minnesota Cup application, and get into some examples and some frequently asked questions, because it comes up a lot. And yeah, we just want to make sure you have a good foundation and share a few other resources with you as well. So jumping into the Minnesota Cup application, it is fully online. It is completely free to apply. and applications are open now and they close on Friday, April 16th at midnight. We really care deeply about supporting entrepreneurs across Minnesota. And so you can be any stage, early stage, any industry. We're completely industry agnostic. You really can be doing just about anything. And we don't have a cap on how early your idea or your company is to apply. We only have a ceiling. So we, once you are earning $1 million a year in revenue or your business is, then we think that you're a little bit too far along to participate and would ask that you support us in other ways. So this really is focused on early stage entrepreneurs or people who maybe don't even think about themselves as an entrepreneur yet, but just have a really good idea and want to get some support and some feedback as they turn that idea into a business or consider ways that they can evolve and advance what they're up to. So again, really trying to make it as open and accessible as possible in terms of encouraging all Minnesotans to try their hand at our competition process. One thing that you should know when you apply, as I mentioned, we are industry agnostic, so you can be doing literally anything and apply. We aren't just for tech. We aren't just for life science or health IT. We're not just for manufacturing. Like there's so many other niche competitions and resources out there, and we're for all of it. But we do use divisions in our judging process so that we have a little bit of a filter or a way to route your idea or your application to a group of judges who knows that space. So I know Kevin and Nate will share some examples and some experiences as judges going forward, but there's often a lot of gray area that you might be able to see your business fitting into multiple of our 9 divisions, and that's totally normal. But we do just ask you to self-select or find one of those spaces where you think that group of judges would be well positioned to understand what you're up to and understand your idea. Then the real meat of our application, and this gets back to some of the accessibility and our desire to serve and support people who even just are at an idea stage and aren't very far along the path of turning their concept into a full-fledged business. The 3 primary questions that receive a score in the Minnesota Cup application are, we ask you to describe your opportunity, plan, and progress in text boxes. So it's super simple. We do ask some other demographic data and collect a little bit more information about what you're up to, but those 3 questions plus your executive summary and a few optional attachments are what the judges see. So we're going to be focusing on the financial component of the application, but just want to emphasize that those 3 questions are what get the score and drive whether you'll move forward into the second round or not. So really be thinking about that. Take a look at the application early. You can always go back to it. You can work on your responses, save it, and come back later. And in a little bit, I'll put the link to the application in the chat as well. But yeah, those 3 areas where you can write and sort of describe your idea and your existing business, if you've been working on it for a while, that's the meat of what we're curious about and what our judges evaluate. Then getting to the financial component, it is a big part of the Minnesota Cup application that you have the option to include an attachment that describes sort of the financial plan for your business. And we get a lot of questions about it every year of, well, it looks like it's not required, but will I be at a disadvantage against other companies if I don't add it? Or I'm super early. I don't really know how to format or how to think about the financial opportunity. I just have this early stage idea. How can I really stand out or sort of convey my thinking in this thing I've never done? And we're here for that. We understand and expect that people are coming to this process with a huge variety of exposure and experiences within these types of financial plans and documents. And so it's one of the reasons that we're having this session today, to sort of demystify things, to help you feel capable and confident that you can include this information, because it's not required. You will still be able to submit your MinCup application, and our judges will still be able to evaluate those opportunity plan and progress questions without it, but it can be a really valuable tool in helping the judges understand your thinking and strengthen your application. So we are just going to talk through some things to be thinking about when you're trying to decide what should go in that attachment, what should it look like. I'm going to pause there really quickly and see if either Nate or Kevin have something to add, or just some of your own experiences as judges and what you expect.
Well, I would just reiterate that the financial plan is a continuation of the story. You know, the words sort of get you excited, get you into it, get you reading about a company and about the opportunity. And then the financial plan can really be a strong representation of what the opportunity is. So the two together, when they're both executed really well, are like a perfect orchestra.
Well said. Yeah. The link between the two is very helpful from a judge's perspective, that you've thought through things. And you know what, there's feedback along the way too. So it also gives the judges a chance to provide some feedback to you. So if you make it to the next round, that'll help with that, going to the next step.
Awesome. Also, getting into what that actually means or looks like, I'm going to hand it over to Amy Junkarius to talk about some of these components.
Great, thanks, Jessica. And so as you can see, there's a couple different names of some options we have for statements on the screen for how you can share your story. So do you need all these components to your financial attachment in your actual Minnesota Cup application? And the answer is no, but as kind of Jessica, Kevin, and Nate alluded, is how do you tell the financial side of your story that you already had documented in words? So let's go through a couple of financial documents that you can use to translate your information into numbers. So starting with the profit and loss statement, this is essentially an explanation of your business and if you made a profit or a loss during a certain period of time. So the profit and loss statement can also be referred to as a P&L, for example. So if I go back and forth, that's the same thing. On the profit and loss statement, you will find is where you can put your revenue, so your sales for your product or your service, your cost of sale or cost of goods sold. And these are the direct costs of producing your widget, your app, or your service. But keep in mind that some types of companies, such as services firms, may not have cost of goods sold. You know, they have, because they don't really have a good, they have a service. So they may have it referred to as cost of sales. Your gross margin which is your revenue less your cost of goods sold, is also found in your profit and loss statement. For margins, these are metrics that assess really your company's efficiency in converting sales to profits. So in other words, it's a really strong indicator of your profitability of your business. And the gross margin percentage that you calc or have for your business is something that all the investors will probably review or consider when evaluating your company as well. So that's a good indicator of how profitable your business is. The profit and loss statement also allows you to outline, various things such as other expenses like sales and marketing, payroll and payroll taxes, operating expenses for general and administrative. So going back to sales and marketing, think about the costs you will incur to market your widget to your consumers. How much marketing will you be doing? Do you need to hire specific sales individuals to help sell your product? Or, do you need, what kind of marketing tactics will you be using to sell your product to your consumers? For payroll and payroll taxes, are you looking to actually hire employees and have them, work full-time, part-time? So you'll have a payroll or salary and wages component in payroll taxes that you as an employer will need to be responsible for as well. In addition to payroll, you could also think about, if you're not going to hire employees, you may decide to use independent contractors or contractors that will be selling or helping you with your product. So think about that piece as well. For general and administrative, this could be from rent, utilities, professional services, anything that, costs related to your product or your service that you need to really account for in relation to operating your business. So for professional services, think of the consultants you'll be using. You know, are you having legal consultants or accounting advice? Rent and utilities, like I said, you know, are you renting month to month? Are you on an annual contract? And, you know, what utilities are part of that as well that you'll have to consider on your profit and loss statement as well. So really overall, when you're thinking of your profit and loss, think about, you know, every cost you will need to incur to sell, market, produce that item that you're creating to grow your business. And so that's a really good starting place for kind of the things that should be on your profit and loss statement. Another type of financial document is a cash flow statement. And this is really just as important as your P&L. In businesses, as we know, all run on cash. There's really no way around it, right? I mean, as we all know, cash is king. So a cash flow statement is a great explanation of how much cash your business brought in, how much cash is being paid out, and what's that ending cash balance that you have per month. So that's a really good indication of just where is your cash going on a monthly basis. Next to highlight is the balance sheet. The balance sheet is really a snapshot of your business at a certain point in time. It's a pretty standardized format, meaning it consists of really 3 buckets. You have assets, you have liabilities, and you have equity. Your assets are items that your business owns or that will provide a future benefit. And these would include things such as money in your bank account, you know, accounts receivable, which is what customers owe you at that point in time. And in inventory, for example, like how much inventory do you have on hand? Your liabilities, these are items that these are items that your company owes to outside parties. So, you know, accounts payable, which would be things you owe to your vendors. Do you have credit cards? So you probably are using that to probably pay or source some of your expenses. So you'll probably, you may have a credit card balance you owe. You could have some outstanding loan commitments, like a line of credit or a loan to a bank or investor. And those would all be things that would fall into that bucket as well. Equity for most small businesses, this is just the owner's equity, but could be investor shares or retained earnings or stock proceeds. But at the end of the day, the balance sheet is wonderful as it has its own equation, right? Like your assets equal your liabilities and equity. So at the end of the day, like what gets me excited is that all equals together, right? From the accounting side. So if things don't add up right, you may need to go back and just review your buckets to make sure that everything ties out. And finally, just want to talk about the sales forecast. And this is something that is just unique to itself and to your business. It sounds like you may think that there's a specific equation or formula to it, and there really isn't. At the end of the day, it's really about your business and what you think it will be or will have for revenue in the future. So for example, think about your sales as, do customers purchase your product at one time? Or do they purchase a subscription to use your product? Are you anticipating the next year that you have a really large contract with a specific customer? These are all things that you can use to kind of help consider your sales forecast. I mean, really trying to help you project out, you know, in the coming years, what you anticipate your revenue will be based on the variables or the circumstances that you may encounter as you continue to grow and develop your business. However, to kind of summarize, during your time with the Minnesota Cup, I would say your profit and loss statement is probably the primary statement that will be reviewed as part of it, as it relates to your written story that you've submitted to the judges. However, I will make a note that when you are meeting with investors or looking for other sources of capital, those individuals may actually request that you provide all these documents I kind of covered with you today. So I want to just make that as a point, as at the end of the day, that also these documents are kind of interrelated with each other, that they're all kind of connected and should be really telling the same story from one statement to another. But just wanted to kind of give you guys an overview as to what all the components are these documents, and see if maybe Kevin and Nate, if you have any commentary on what your thoughts are about these statements as well as it relates to the competition.
Thanks, Amy. Good job. What I just want to add is with regards to use of capital, if you already have gotten investment or you will, that's where a balance sheet will be and cash flow statement comes in handy, so that potentially you're looking at getting another round of investment, so they can see that you already have something there that you've received, and also kind of how you've used those funds. That's good to know that they've been put to good use. And so when they invest, you know, they want the prospect to be good for them.
I would say for this first round, in terms of like, as Amy mentioned, the P&L is typically the one that we'll see most often in this first round of application. And we'll see some really good examples of that, of what P&Ls and financials look like here in a couple slides. But I think when I look at it, again, I go back to assessing the opportunity and making sure the story being told matches the opportunity. And there's two things that I often look for. And you see this a lot because I've been in the general division for a long time. You see two things. One, a P&L that shows that the company will never really make a significant profit. And the other one that you oftentimes see is a P&L that shows a trend line like this of revenues going up. And that's not necessarily wrong. It just needs a story behind it to explain why that is possible. And both of them really just go back to, evaluate your business plan, evaluate your business model. Is there a way that supports a revenue cycle like this? Or is there something else that you can do that would help you demonstrate a path to profitability for the company?
Awesome. Thank you all. Well, moving on to the next slide. I'm just going to tee up, as everybody has mentioned, we do have some great examples to share with you. But to emphasize or say in advance, because we get this question a lot, is like, does Minnesota Cup have a format, or do you have a template that you prefer? And the short answer is no. And so hopefully by sharing a few of these different examples, you can see the variety in the ways to show this financial information. And hopefully that makes you feel less intimidated or very empowered to just Google something, or like Google P&L template for manufacturing company or something, because the nuances that we want to get across to everybody is that it depends a lot on how long you have been in business and what industry you're operating in, what some of those fields are that would be important to include. And because we're industry agnostic and we're supporting such a huge range of maturity level for these different startups, there's no one perfect format that would cover every single one of those scenarios. And so we try not to either intimidate someone or freak them out when they're really early and they don't know the answers to these things yet. And we also don't want to oversimplify it for someone who's been in business longer and maybe should be sharing more information about their cash flow, or they do have a loan or investment. And it's important to understand how they've spent that money the way that Nate described. So there's a little more background on our thinking about that. But to get into some of these financial stories and examples, I'm going to tee up and sort of let Kevin and Nate speak to what they notice and what they like about each one of these, so that you can be thinking about it in the context of what you're working on and what you're doing. So please feel free to listen closely, look closely, but use the Q&A tool, that as you have specific questions that come up for you about these examples, feel free to type them in. I will do my best to tee them up while we're on the slide together, but if we run out of time or we just need to keep going, I'll definitely come back to them and we can revisit them at the end. So the first example that you're going to be looking at is for an early stage food producer. It was their first year competing in Minnesota Cup, but they had been in business, or they'd been working on their concept for about 3 years. So you'll just notice that some of those fields are specific to someone making food. And so I'll just open it up then for Nate. What do you notice, or what do you like about this format and what this company was doing well with their financial attachment?
Thanks, Jessica. Well, I guess first off, as you can see right away, those assumptions, it is helpful to presumably this is tying into their business plan as well, of growing from having that shared kitchen model to a co-packing situation as they grow, as well as, as you can see there, their cost of sales decrease over time. Presumably, as you make more, you can do it more efficiently, and your cost should go down. They factored in the payroll cost, which is helpful. on the what it's going to take to get to that point from a labor perspective. Kevin, do you have any thoughts?
I reiterate a lot of the same things, but it looks like from the way that they put this together that they had done some research into what their costs would be. And it demonstrates a level of realism by showing sort of a initial couple of year loss, followed by some profits and growing profitability with the sales. And really kind of a lot of realism seems to be built into this given the size of the opportunity, and you can't see behind the slide, but the amount of revenue that would ultimately be there. You look at it and go, yeah, this is an achievable result for a company in this space with these types of costs and this type of revenue growth. It's achievable and realistic.
Perfect. Thank you all. I'm going to move on to the next example. So for this next company, this business is a software company and has been around, I believe, had been working on their concept and pivoted their business model a couple times. But it was also their first year applying to Minnesota Cup. So they just have different categories of information that they've included because it's a totally different type of business than a food producer. So I'll maybe open it up to you, Kevin, first. What do you notice as a judge and a financial person? What do you like about this, or maybe, anything else you'd like to see?
This is an interesting one. I have a couple criticisms on the formatting, but nothing. I guess I would say nothing major. It's really more the fact that I would sort of have created a separation between the revenue and the cost of revenue, because it's kind of confusing at first glance what's revenue and what's costs. It's kind of a nit. I'm starting at 1,000 feet and going up, but it's clear that they are presenting a massive opportunity, both in terms of revenue opportunity and the cost to generate that revenue. They are not demonstrating in this projection really a path to ultimate profitability in this. So I think one of the first things I would say is that I would have liked to have seen maybe another year or two of projections or something that would ultimately show to profitability. But from the most part, for a SaaS-based company, it does present some realism. It's just a bigger opportunity and a bigger spend to get there. Nate?
Yeah, I kind of start looking at two lines: first revenue and then net profit at the bottom. And so I see the trend going up. That looks great from a especially SaaS model. And then I look at the bottom and I just see the loss growing. So I'll echo what Kevin said: another 2 years to, when are you actually going to get out of the red by the 5th year? Looking at the some of those expenses, the R&D and internal engineering, I would have expected actually that to be higher expenses earlier on. I would think that it would take more work to get to the point where you're able to bring in $3 million in revenue. So I would guys question how they kind of came up to that and on their assumptions of why is a lot of it going to be delayed with what they're working on. It is nice they included the headcounts at the bottom, both full-time employees and also, the contract. That is helpful to kind of see that they have been thinking through that. That needs to be obviously part of this. In order to generate that revenue, you need people usually. So
this is probably one that, oh, sorry, Amy.
No, I was just going to say like, when I reviewed this as well, I just thought like, I would love to see what their written component was to say like, what is causing the big jump in revenue from 21 to 22.
And I was going to say, and this is probably more of a later round observation, but it would also be nice to see what a balance sheet looks like, to see what type of investment they're looking to raise to be able to support this level of revenue growth and development.
Awesome. So then our final example, I can advance the slide, is this business was actually competing in Minnesota Cup for the second time. So this was not their first rodeo. So they did have a lot of prior support and coaching on building more sophisticated or more in-depth financial information. But they were also a software company or a technology platform. So it had some physical costs, some supplies that they would have to manufacture and ship, and then other costs that were related to sort of online support services. So I think that that's helpful to point out in terms of both their maturity and that they had a blend of different types of costs. So I'll have you maybe share a couple reactions or comments first, Nate.
Sure. Well, first thing I see on the cash flow statement is the negative cash. So as Amy mentioned, cash is king. So presumably they're probably expecting some sort of investment in order to be able to have that first year. Clearly, maybe they're bootstrapping it. I don't know. But that's just a kind of a big item to me that I'd ask questions on how that's going to be. Also, some assumptions would be helpful to tie in from their business plan into this schedule. It's a nice cheat sheet, if you will, so you're not flipping back and forth between the business plan and the financial forecast here. But such a large increase in revenue from years 2 to 3, it'd be nice to kind of have that handy to see what sort of assumptions were made there, number of users, or what is it that's really driving that. It is nice they thought about income taxes, because that often gets neglected. So it's nice that they have a line there for that, and as a placeholder, if you will, for that piece. Yeah, I think I'll let Kevin and Amy add if they have anything else.
Well, I mean, this is a perfect example of a hockey stick, and we don't have the written words, so I'm kind of talking specifically off of the numbers here. One of the things that really jumps out at me is on the very bottom line of the income statement there, you see 42.9, 45.6, 46% profit margins, which are off the chart profit margins for most companies. And so in the written word, I would hope to find something that is very unique about them that would allow them to sustain those kinds of margins. Otherwise, it may be an indication that the model maybe needs more sales support or something to that effect that would allow it to grow like this. But we don't know from without the written words in there. As Nate mentioned, it does look like they do need somewhere in here to balance out their cash flow. They need some type of financing that would be a better assumption to have in the financials. But it certainly tells a story that gets your eyes popping, and assuming the written words match, it would be quite an opportunity for someone to look at this and see that there's a lot of potential for this company.
Awesome.
I would like to add back to the 1,000-foot. They did have some financing activities right away that we see, that 225. So you'd expect there'd probably be some interest expense in later years, pretty immaterial to the overall numbers, but really it's showing that they've thought through those things, that there is a cost to having debt in there. And then I would just say, kind of from comment Kevin made earlier on a previous one, is on the formatting. There's a lot here. It's really condensed. And so try to make it easy to read, space things out more. There's some standard formatting with, lines and underlining double underlines, if you will, to provide that space. So it's easier to follow and read and the big things to stick out.
That's awesome. A couple of things I want to pose to you all, just understanding that a lot of people who are looking at some of these things may, like, their eyes may bug out, or just getting to something like this, above and beyond the nits, would be a lot for them to sort of wrap their heads around. So from a couple of like term standpoint, I want to go back to you quickly, Kevin, because a couple of the pieces of feedback or the reactions you've shared have been focused around profitability. And I think it's really worth saying or emphasizing for folks that it is not always realistic, or it is certainly not always expected, that you need to make a profit right away. That's often why people do take out loans or they get investment, that sometimes it takes some time, even multiple years, before you're generating revenue, and particularly profitable revenue. So Kevin, could you say a little bit more about what that runway towards profitability looks like, or what you look for depending on the type of company it is?
Sure. I mean, we really look at it kind of company specific or industry specific. So for example, if you're developing the next greatest drug, you may have a very long life cycle to go through FDA approval and clinical trials and all that stuff. And you may not show a profitability for 10 years. And then even then you may not even have a profitability, because your exit may be that you plan to sell as soon as you get FDA approval. So that would be one example of a company that, yeah, you may never expect to see a profit on. A SaaS-based company, ultimately, oftentimes the goal is to not have profits right away. And then ultimately, once they get to a critical mass of customers, they can kind of scale back sales and marketing and have tremendous profits. A smaller company, like the first example we saw, maybe wouldn't have the interest to capture someone to invest a lot of capital in this company. Not that it's not a great little company, but it's probably more of a owner operator, making a nice living, having some nice profits kind of business. That may be, that's not a company that you'd necessarily raise $5 million for, because it just wouldn't really support that. So, and it also wouldn't support a 10-year track to get to profitability. So we really try and match, does the projection sort of match the industry that they're in and the story that they're telling?
That's awesome. Thank you. I'm going to relate it to this one as well, because we see it highlighted a little bit more clearly here than we did in the other two examples. But Nate, if you wouldn't mind helping someone who doesn't know what assumptions are understand those a little bit more, and maybe give some examples from different types of companies of what types of assumptions you look for.
Yeah, I mean, typically these are prepared in Excel, and so it is helpful too as you're making these, and how you're determining and what you're putting together into getting your revenue growth and cost growth, things like that. It's a tool that you can use to also kind of change and see how it impacts things. The assumptions, on the tech side, they're going to be, number of users, cost to acquire users, things like that. Obviously, when you're making widgets, it's those costs. So what's the raw materials that it's going to take to create that product? It could be, other inputs that go into play there, like labor, to physically manufacture something. SaaS, you're going to obviously have maybe upfront a lot of development costs and whatnot. So there could be, that spike to begin with, and lower there for R&D related types of expenses. You might have R&D reinvestment could be a separate line item there for those types of things.
Awesome. But yeah, overall, it does help to include assumptions no matter what you're doing. especially because this first attachment, you may be estimating costs, you may be estimating something, but if you can help explain assumptions, just may help the judges get a little bit more sense of your thinking of what goes into something that's in one of those sort of number fields. That again, it's an Excel attachment, so it's it's pretty short and sweet. So assumptions, yeah, are just a couple places to call out some things like that are meaningful to where you got your numbers from. Awesome. Well, we do have some Q&A coming through. I'm going to shift. I can come back to these slides if they're relevant to people's specific questions, but I'm going to move on to some of the FAQ question slides as well. And then I'll open up this Q&A to see what folks are asking. So from Aditya, related to sectors and comparables, what ROIs do you see for manufacturing companies that within a couple of years to say this may be worthwhile? So what types of returns would you expect, or would you look for to think about whether it's worth pursuing a manufacturing concept? And it may be hard to, like, that's still pretty high level. Might be helpful to know more specifics, but do you have any guidelines that you all use?
Well, I'd say how unique is the product? You know, is there a lot of other competitors and things like that where the market's already set, or is it something brand new, unique that is going to be able to drive maybe a higher price point? You know, MSRP type situation there. RMA and other tools are pretty good for seeing what other manufacturing companies might expect from a, you know, cost of goods sold, gross margin, things like that. But it really depends on what it is specific that you're manufacturing.
Mm-hmm. I agree with Nate. Yeah, especially when you get into, if you get into situations of straight manufacturing, you know, RMA and things like that are really good. If you're doing things that have very expensive custom tooling, then maybe you have to forecast a higher, towards the higher end of the RMA range for profitability and things like that.
Awesome. Well, there are definitely other questions rolling in, so please, actually, could you define what RMA is, Kevin?
It's the Risk Management Association. They publish statistics that that are based on industry and size of the company, that says what levels of profitability and, you know, how fast receivables turn over and what gross profit is and things like that on different industries and size companies. It's available at the public library if you'd like to check it out.
Yeah, I think with all of this, it's a helpful takeaway to don't be limited if you don't have a background in finance or you're not a financial expert, but if you just start somewhere and then do some research. Google, the library, all these things are here for you, and taking the initiative to try to understand, even if you don't know a lot about how you're going to realize your opportunity, but thinking through a couple of the basics and then doing some research about what those costs might be is super valuable, and can even help you start to think about questions for yourself of, well, if it's going to cost me this much to run this for 3 years and I'm probably not going to make any money until then, like, can I do that? Is that feasible for me as an individual? So it really is worthwhile, both for the Minnesota Cup judges and for you as a founder, to be making some of those decisions and hopefully getting to know your own risk tolerance and sort of what you're willing to take on. We're getting a bunch of really good questions in the Q&A, so please keep adding them. I think some of these I'm going to wait until the end on to just have folks answer verbally. I'm going to type a couple answers as well, but I want to move over to the frequently asked questions and cover a few of them myself before I turn the mic over to Kevin, Amy, and Nate again. get the question at the top all the time. Do we have a format? Do we have a template that we can share? And again, going back to the 3 different examples that you saw during this presentation, we don't. And in large part because every single industry and at every stage, you're going to be wanting to share different types of information. If you took on investment or if you have a bank loan, you're going to want to include a line about debt, and somebody who doesn't have those, who hasn't taken those on, doesn't need to add it. Or somebody who has high costs of R&D, like Nate described, when you're building a technology product and you have to do a lot of development and coding up front and pay for those things before you can even have users on your platform. That's going to look really different than somebody who's making something at a more making something physical that they're selling on an ongoing basis, who will have recurring costs but won't have a big upfront R&D cost. So we don't have a preferred format or template. We really we want you to have some of these examples, but it's all Googleable again. So I would ask Nate and Kevin and Amy as we go through the Q&A, if you wouldn't mind sharing like some of your favorite resources that you would recommend of like, look here, or if you haven't started yet, you've never built something like this, where are some places you could go to find the right format for your type of company? Do you have something off the top of your head, everybody? Otherwise I can come back to it.
Well, as you say, Google, if there's public companies in your space, things like the SEC website for 10Ks or annual reports, or Standard & Poor's reports, which are available at your library online. You don't even have to go there. Those are all good.
I mean, you can connect with a friend. If you have a friend who just went through, has an accounting background or finance, or somebody on your board, or a mentor, I mean, all of them as well are great resources to you as you go through your journey. So a lot of them might have financial expertise where they are willing to share that with you and help you walk through your financial documents to make sure that the written piece matches what the numbers are saying.
Awesome.
Yeah. And on the tech side, I mean, there's different groups in town, like, community to talk to others, kind of what they're seeing with Enterprise Rising or Beta.mn, things like that, to ask others what they're kind of seeing for expected costs to get to the point where they can deliver that service or app or whatever it might be.
Awesome. So second frequently asked question, is the financial projection or financial plan that you attach to the application optional? And the answer is yes. We hope that through this webinar, we're kind of giving you some of the basic information, or encouraging you to try to add something, to include that information. If you can spend some time and think about it, do a little bit of research and get some support if needed. It really does help strengthen your application, because it shows the judges that you have been thoughtful, that you have done the work. It really demonstrates that you're willing to be thorough and try some things out. But it is optional. You don't need to include something to submit your Minnesota Cup application. So it shouldn't be something that limits you or makes you feel like, oh, I'm not going to be able to get something done, so I'm just not going to apply. Like, don't approach it that way, but it is a good way to boost your application, or help the judges feel like they understand what you're working on a little bit better. And then the third question, do your financial projection document get a score? No, they do not. As I mentioned before, and as you'll see when I share some of those links in the chat, we score the 3 questions where we ask you to describe the opportunity, plan, and progress you've made for your business or your idea. And as everyone has shared, being able to have a written component to your application that matches what you're saying in the financial document, that's like the gold standard. So those 3 questions get scored, and having a financial document can help make those scores stronger, or help a judge, answer a question they might have where they're on the fence about what score to give you for a certain field. But the document itself doesn't get a score. So making it look really beautiful and easy to read and like top notch is good. But the most important thing is for you to make sure that those 3 written components on opportunity, plan, and progress are easy to understand and concise, and that you get your point across. So yeah, it is really, this is like the top notch ways to, above and beyond those 3 questions, to stand out and to show the judges that you're approaching your business thoughtfully. And then, yeah, we do have some more questions in the Q&A that I can turn to and start sorting through. But for the next question, what are the areas you should spend time researching? We covered this a little bit, or you all spoke to this a little bit. But if you, whether it's through Standard & Poor's or through, finding companies similar to yours or a peer company to look at their public documents in terms of financial information, all of that, those are great suggestions. But what other types of research might you try if you're new to your idea, or you're just trying to understand what your future costs might be? And I'll let any of you take that one. Any other resources, or even just specific areas where it's like, this one, everybody's estimating it. So it's really unique to you versus, oh, this is pretty standard. You can't make up the cost of some raw good. Like, so what are areas where you could research versus things that it might be hard to find answers to online?
Well, I think on the tech side, that's going to be more difficult to have a specific amount, right? It's there could be a lot of things that go into it to get to what you need before you can deliver that. So I think that would be pretty hard to estimate there. I mean, we're not, I'm not on the widget side of things, but, we're not diving into details on, the cost they're using and is that the right cost of whatever type of raw material. It's really, does this make sense and have they thought through it? They'll put together these financial projections. They're not going to exactly come to be, we know that, but it's estimates, but it's shown the thought in the process and what is it going to take to become profitable and things like that, or how much capital am I going to need to get to that point? And I'll just add, someone asked a question in the chat, I'll just kind of adjust now. So, they haven't started their financials, so what would be the best place to start? Personally, I'd look at the costs. What is it going to take you to get there to the point that you can sell something? Because that's going to determine, do you need extra capital and things like that to get to that point? And then how long before you can become profitable, pay back yourself or investors or whatever it might be.
That's awesome. Thanks, Nate. Other comments from Kevin or Amy before I move to the next one? Okay.
I would just say, I mean, don't forget, like I said, about the sales and marketing piece and employee piece. Like, you may just think at the beginning of your business, it's just gonna be you, your other founder, but as you grow, like, think about what that looks like from an employee perspective and how many people you may have to employ at some point. And then the marketing side too, like, don't underestimate what it might take you to get your product out in the market or your app or whatever it might be, because that might, sometimes you may underestimate what that might be, but make sure you're, as we've all talked about today, make sure everything's thoughtful. Like, don't shortchange yourself if you think it's going to be $100,000. Like, put it on there and make it realistic for what your spend might be.
Awesome. So we talked about assumptions a fair amount, but someone else asked a question in the Q&A field that I think would be helpful to add into this of not only what types of assumptions should you include, but how do you physically add them into your Excel sheet or your PDF? Is it best to do some type of a call out at the top like that example showed, or is it just as simple as adding an asterisk or some other type of like notation next to the number and then bringing that note down to the bottom to explain with text sort of what you're thinking? Do you all have a preference?
Yeah, from my perspective, it depends how much our assumptions changing throughout. I mean, if we're talking about just a revenue growth or cost of sales growth, that's pretty consistent. I mean, a separate key or box, like a map legend, right? The key is good enough to have those percentages or, either percent of sales or percent of growth. If it's more specific that, there's a big turning point that's happening, it might be good to use some sort of footnote, a number with a parentheses around it or something with a note at the bottom of why there's a big spike up or down in that specific item. That's just helpful to call it out.
I agree. I don't think there's a specific format that is better than the others. It's just whatever can clearly tell the assumptions that match the numbers. Okay, it could be as simple as a bullet point list on a separate page that references back to the Excel. Oh, it wouldn't be a Zoom without saying you're on mute.
Yeah. Love it. Just kicking butt this morning with my technology. But a couple folks asked the same question in the Q&A that I think is a good segue to this, that is it okay if these financial documents that you're working on for the application, that they change, whether that's your assumptions change or your estimates on costs and revenue projections change if you advance in the competition? 100%. They will absolutely change. Judges expect that they will change because in some ways you may refine or change the approach that you are making. You may pivot for, I was going to charge this for my product, and I think I'm going to go after the customer. They want something different than what I was originally planning, so I'm going to totally pivot, and all of my financial information will be updated to reflect that. That's extremely common, and that's not viewed negatively by the judges. I think that they want to see how you're evolving your thinking. They want to see how your estimates get closer to reality as you know more about your own space and your customer. So if you do progress in the competition and you are in round 2 or the semifinalist round, you work on a business plan, a pitch deck, and a 1-minute video, and you can absolutely update that financial information to include in your business plan. And it will not be an issue whatsoever if those numbers are different than what you included in the application round for that reason.
And I would go so far as to say if it doesn't change, that's a bigger red flag than if it does change. Just with the mentoring that happens and the further development of the plan, it would be, well, if it didn't change, you maybe didn't need to be in the competition or something else, who knows? But I would expect that it does change and it does refine with the business plan.
I mean, it's part of the journey, right? I mean, you're constantly learning something new about your business and your consumers and your vendors that you're working with. So it's just bound to be that your initial projection you provide will not look the same. So don't be scared. It's okay.
Yep.
Awesome. And it is just at the top of the hour, so I want to be respectful of everyone's time. And there are a couple questions here that I can follow up on to sort of try to answer them personally after the fact. So thank you so much for asking them, and don't mean to skip anyone, but maybe using the very last question, like what's the best way to make it to the semifinal round, or any other parting advice or recommendations you'd each love to give. Would love to hear any final thoughts or tips you might want to share before we wrap up. So I'm gonna go to Nate first.
Yeah, well, I'm just going to echo kind of what was just talked about, but listen to the judges. They're going to provide feedback, even if even if you don't advance, take their feedback, come back next year. That's what it's there for. It's about improving, getting better. You're not going to be able to do it alone. You're going to need other people, mentors along the way. And so take the feedback and try to evolve and pivot and whatnot from it.
So Amy?
I would echo the same. Use your resources. They are wanting you to succeed. They want you to be successful. So leverage those resources around you, those mentors, friends, the networks, your community, everything that we kind of mentioned today for resources. I mean, all of these are here to help support you, and you're in the best place possible, right? Minnesota is all about startups and making sure that this is a community that you can thrive in. So reach out if you have questions to any of those individuals or resources, because they are all here to help you advance.
Awesome. And Kevin?
you know, in the first round, we could read up to 100 different plans. And that's a lot. So for me, it comes down to the very first sentence. The very first sentence has to capture your interest and make you want to read more. Something unique, something different, something that makes you want to continue reading the rest of the document. And it's not, well, it's not, have you ever, imagine if, you know, there's something more creative than that. That's half the plans. That's what gets me, is when you go like, oh, wow, I need to read more.
Awesome.
And I think I want to add one more actually. Some of the divisions are definitely more technical than others. And while there are definitely specialists within the judge group, not everyone is, because we're trying to have a diverse group to help you. And so, you know, it might help to ensure that if you have a very highly technical type product or service, that you're, you know, maybe having someone who doesn't know about it read it before you submit. Is this easy to understand? Will someone get what you're trying to get, and the value for that before the submission?
Awesome. Yeah, I will close up and thank you all so much for being here. But I'm gonna just underline and double click on what Nate just shared, that really to have the strongest possible application, it comes down to, can you convey your idea thoughtfully and concisely, and really show your passion, and really help get that across on paper, or often on a screen, because these are virtual applications, but that's not easy to do. So even if you know your idea better than anyone, like we know that you are going to have a certain level of passion and excitement about it. One, make sure that comes through, but two, have somebody else look at it for you. Get feedback within your own network and own sort of trusted circle before you click submit, because you really just want a judge to be able to follow and understand and get it. And feedback is good. You don't have to take every single human's advice, but particularly for something written like that, and for the financial projections, if you have folks like that in your network, get feedback. So again, I think just super grateful to Lurie LLP for all of the time that you give to the Minnesota Cup process and our entrepreneurs. It's so valuable. And there are so many folks who have learned from your expertise over the years and all the generous ways that you share your time with everyone. But want to thank you all for being part of this, and thank everybody who's watching and attending for your interest, for your hopefully for your willingness to put yourself out there and apply. It is a competition format, but this is a space for people within the community to show up and support you and try to give you access to resources and advice that maybe you wouldn't be able to find otherwise. So I hope you'll take that risk. I hope you'll put yourselves out there and reach out for that support. And just good luck with your applications. I realize I didn't put a lot of the links that I offered in the chat, but I will follow up with a thank you email and include them there. So you'll know right where to go for all the next steps. Have a wonderful rest of your Monday and a great week, everybody.